Hello everyone, welcome back. I got some really good ones for you today on this Sunday, April 14th, 2024. Of course, I shouldn't say really good ones. We got some pretty freaky stuff going on geopolitically for markets as well. A lot of things to get caught up on, you guys. Video I did a few weeks ago, kind of gonna summarize that for you guys real quick. Talk about things that have happened over the last couple weeks, bring you into the present, and then discuss where I think this is all going. Give you guys my thoughts on where your favorite asset class is probably going in the coming days and weeks. So let's dive right into it, shall we? Powell concluded his FOMC meeting about 2 to 3 weeks ago. Came out chambering interest rate cuts into the market, getting the market on more or less an easing type posture, getting ready to bring back QE. He's also talking about slowing the pace of his balance sheet roll-off, so slowing the pace at which he dumps toxic assets back into the market. Powell came out very dovish, guys, a few weeks ago, like very dovish. It was what I was calling the Goldilocks zone of asset price appreciation. However, I think Powell stepped off that stage after the last FOMC meeting, and his homies, his inside circle, they were like, yo, you were maybe a little bit too dovish. You got these markets a little bit overheated, a little bit too excited. You got the dollar weakening maybe a little bit too much. Let's take this a little bit more slowly. Let's cool it and calm down about loading so many interest rate cuts into the market so soon. So what happened in the following days and weeks? We had Neil Kashkari, Jamie Dimon, so Neil Kashkari being one of the Fed presidents. He came out saying, not so fast. Maybe we only need 1 or 2 interest rate cuts, not 3. And maybe they're going to be at the back half of 2024, not as early as May or June, kind of telling markets, calm down. We had Jamie Dimon saying, interest rates, they might need to go up as high as 8%. So we had kind of Jamie Dimon, the CEO of JP Morgan, also kind of pouring cold water onto these markets. We also had inflation data come in last week or so, a little bit higher than expected. And what happens when that inflation comes in a little bit higher than economists were expecting, the market kind of freaks out a little bit, sells off a little bit. Not because inflation is bad for stock prices, because believe me, inflation makes stock price tags move higher. But because now the market's going, well, if inflation's a little bit too hot for interest rate cuts as early as May, these things need to get put off to the end of the year. Saw a little bit of that. So as soon as the market's like, dang, we're not going to get our cut in May or June, we're going to get it in like August or September or October or maybe even December, market kind of gives some back. You've been seeing that. But to me, guys, that's just kind of noise, because net, we have an inflation problem. Been discussing it for 2 years now. Inflation makes asset prices move higher. The only reason it doesn't is because as soon as the market starts to go, dude, inflation is really hot, they look over at the Fed and they wait for the Fed to say, you're right, inflation's too hot, we're taking up interest rates. And the market does not want interest rates to move higher. Step back though, look at the big picture, that 100,000 foot level. We're done hiking interest rates. And right now, Powell's in the process of slowing the roll off of his balance sheet. Soon, I would guess in the next months and years, that Fed balance sheet's actually going to get loaded back up, and the market's going to like that. The market wants the Fed to take as many of those assets that are no good and throw them on their balance sheet as they can. The market wants to see the Fed print money, buy bonds, drive bond yields down. The market wants to see forms of essentially like yield curve control. The market wants the Fed to get involved, and the Fed is saying, don't worry, buddy, in the next few months or so, we're going to be getting involved. So, net, all of this has been pretty good for asset prices. I still think we are in the Goldilocks zone of asset price appreciation. We do have geopolitical tensions flaring up, though, that we have to discuss. So on April 1st, Israel bombed the embassy in Iran, the Iranian embassy in Syria. So in Damascus, Syria, the capital is Syria, Iran had an embassy. Israel bombed it, killed, about 12 people. Nasty stuff. Now the market's looking for Iran to retaliate, and we saw that yesterday. Iran fired a bunch of drones, some cruise missiles, but Israel plucked the vast majority right out of the sky and really didn't do the damage that Iran was hoping they could. Iran really kind of lost that bout, that retaliation. Iran was supposed to get really mad about their embassy getting bombed and really inflict a lot of pain and casualties on the Israelis and the IDF, but it looks like that ultimately failed. And, although the markets were closed yesterday, I did see crypto Twitter really freaking out. We saw the 24-hour crypto market like bouncing around like a Jack Russell freaking terrier. I mean, we saw Bitcoin sell off 10% in like less than 30 minutes. Those altcoins getting smashed. We saw the Dow Jones implied open yesterday, pointing to a 400-point drop tomorrow. But guys, this is all reversed. I think now that the dust has settled a little bit, everybody's kind of calmed down just a little bit. There's kind of a lull going on right now. Stock futures are actually higher. We've seen, so I think tomorrow stocks are actually going to move higher. I think people who are looking to short the market based on what's happened over the weekend are actually like, they're going to get in trouble doing that, my personal opinion. So I'm looking for these markets to move higher. I think a lot of traders are also on a hair trigger to buy a bunch of crude oil tomorrow, but be careful with that because things are already kind of calming down a little bit. We've already seen crude move up to about 90 a barrel in pretty short order. So maybe I look for crude to kind of cool off, stocks to actually go up tomorrow, gold to actually cool off, come down tomorrow. We're big fans of gold on this channel, have been since the inception of the channel. We do believe in acquiring physical precious metals for the long term. So not really trading vehicles. We don't really like the mining stocks or the mining equities, but we do like holding a tiny amount of physical gold, silver, platinum, palladium. We don't like to go overboard, but we do like to own this stuff. So, good for us that gold is now at an all-time high, hanging around 2,400 an ounce. But do I think it's going to last? I don't know about that, because I don't think the West and the dollar empire is ready to allow gold to keep moving higher. And if you don't think the dollar empire controls the gold price, you got another thing coming. So I actually think gold is kind of like it did during Brexit. Like the moment it happens, that's actually the top. So right when the sky's falling and you need to run out and buy gold, that's generally the top, and we actually pull back a little bit. So I'm actually looking for us to pull back a little bit. Still like gold, not selling any gold, tentatively bullish gold on this channel. Maybe consider buying the dip, especially if we can dip maybe back down to like, I don't know, 2,100 or below 2,100. Maybe you could look to do a little bit of stacking if you're into that kind of thing. If not, though, hey, it's all good in the hood. I know a lot of you guys probably aren't big fans of precious metals, and that's totally okay, because we still like tech, we like crypto, we like energy. So, little something for everybody. But kind of looking for, personally, gold to pull back tomorrow. I know that's contrarian. Oil to pull back tomorrow. I know that's contrarian. And stocks to move up, which I also know is contrarian. So kind of look for those things. Throw garbage at me when I'm wrong. And hey, if I am wrong, I hold gold. I got energy stocks. We've been fans of energy stocks since the inception of this channel. So, I can't lose, I guess you could say. But we'll just have to see. We also have a lot of Fed speakers coming out next week. So we got like Bostic, Daly, pretty much all of them, you guys, like Mester, Jefferson, Williams, like a lot of Fed speakers this week. And kind of like how we've been talking about in this channel, the way they kind of manage those interest rate expectations. I'll be curious to see if they double down on cuts coming soon, especially with the geopolitical backdrop. And, the Fed is firmly in control. We're here to support markets. Where are we going to get that kind of rhetoric this week? Or are we going to get, nope, inflation has still come in a little bit too high, and we need to do, some interest rate. We need to wait to cut rates, basically. So, for this week, you'll be watching gold, oil, tech stocks. We do have earnings too. Keep an eye on those earnings. Taiwan semiconductor earnings coming this week. Give you maybe a glimpse of what's going on with that AI bubble. I'll call it that. It's a bubble. I still like mega cap tech though. I don't care. I'm a fan of Nvidia. I like Google. I like Amazon, Tesla. So, if AI is in a bubble right now, I'm ready for that bubble to burst. Who knows? I'll probably just buy some more Nvidia. You never really know with bubbles, because what do bubbles do? People say they burst. No, they double, then burst. So keep that in the back of your mind. But maybe we'll get a better idea where we're at with this AI bubble this week, given earnings for some of those larger chip producers. Yeah, man, it's just been wild. I think the market was ready for Iran to retaliate. I think that it was really a non-event in a lot of ways. Like, it was super freaky yesterday while it was unfolding. Crypto was going crazy. I was also in there buying the dips, you guys, for cryptos. So altcoins yesterday, I got some fills. XRP, File, Atom, Filecoin, Atom, Cosmos. What else was I buying? Link, Pepe, added to my Pepe bag yesterday. That was crazy. I was trying to send ETH from Coinbase to my MetaMask to swap for Pepe, but the fee to send the ETH was like super high. And then even if I had sent the ETH to MetaMask, the fee to swap for Pepe was like, guys, I saw a gas fee yesterday. I got a quote for $300. I was like, well, the Ethereum network's officially broken. So I guess it's not just Solana that's crapping the bed. It's also ETH right now. So, the slot machines yesterday were really jamming, but I think things have actually calmed down considerably. And I'm looking really for the opposite of what a lot of these traders are looking for tomorrow. I'm looking for gold to come down. I'm looking for oil to actually maybe come down a little bit. And I'm looking for stocks, which people thought were going to get hammered tomorrow, to actually move up. I think the market was waiting for that retaliation, and then it came and it went, and the market's like, really? That's all you got? Also, guys, the Israeli Iron Dome did a really good job of shooting down all those incoming drones and cruise missiles from Iran. So, there's also rumors on Twitter that some new technology was unveiled, some new counter battery. So not just the Israeli Iron Dome, but like something else, some other technology, way to shoot a bullet with a bullet, because we've seen some very anomalous things over the skies of like Jerusalem in the last 24 hours or so. So, maybe Google, like, dig deeper than me on this one. Maybe Google like weird counter battery technology over Israel, or something like that, you guys. Something other than the Iron Dome, which, for those of you who don't know, the Iron Dome is basically just a big radar setup that the IDF, the Israeli Defense Forces, have. And as soon as those rockets, either coming from Gaza or Lebanon, Hezbollah firing their rockets, or missiles from Iran, the radar picks up on that and is able to shoot a missile at the missile, a bullet with a bullet, and kind of shoot that missile down. That technology, though, it's been around for a really long time. Shooting a bullet with a bullet, I think we've been doing that since the Gulf War, 1990, 1991. Look up the Patriot missile. So we've been shooting a bullet with a bullet for a while, learning how to shoot down Chinese spy satellites and things like that. But I do think a new technology has come out that is a little bit quicker, more effective, creates a little bit weirder of an effect. There's a rumor out there, guys. So put another way, I think the West is kind of impressed. I think the US and its European allies are looking at the Iron Dome and what's going on in Israel, and they're like, dang, you countered that Iranian retaliation like really well. Good on you. So, I'm actually looking for things to temporarily calm down. But guys, big picture though, crazy stuff going on, with Hezbollah to the north of Israel, Hamas in the south at the in the Gaza Strip, the Houthi rebels that are in the Red Sea, Iran now getting involved. Like, Israel has really stirred up the hornet's nest and pissed off the entire neighborhood. But they do this happens in history, pretty regularly. So, was it the 6 Days War? Is that what it's called? Google 6 Days War, Israel. Yeah, they got invaded by like 5 of their bordering countries. Like, Egypt invaded them, I think Syria, Jordan. Like, everybody teamed up to take down Israel. And not only did they get crushed within like 6 days, but Israel actually flipped that to a positive and ended up taking even more territory. I think it's called the 6 Days War. Check it out. But anyway, kind of like a little bit of a repeat of that, almost like an echo of that in a way. Israel's always got like all these, neighbors like just waiting for the right time to jump Israel. And that Iron Dome really held up, and I think might calm markets down a little bit. I'm hoping there's a little bit of de-escalation. Guys, I don't want the war to continue. Make no mistake about it. And I'm not on Israel's side. Not on any of these people's side. You know, for being an American citizen, I'd like the border to get advocated for, not Ukraine or Israel. But the border can't advocate for itself. So you got these weird allies or quasi-allies like Ukraine, you know, getting all of our support. The beast system feeding. Google military Keynesianism. That's a good term that I'd like to get you guys familiar with. It's, you know, Keynesian economics is getting the economy going essentially through stimulating aggregate demand and government spending. Well, military Keynesianism is where you try to get economic growth through your military industrial complex, essentially arms. So I think the US is doing a lot of military Keynesianism right now, and it's sending our fiscal policy just through the roof. Tons of fiscal spending. So pretty crazy, you guys. I want to linger a little bit on gold with you guys. So we're going to kind of talk about that in a little bit more detail. Gold is acting right now a bit like a canary in the coal mine. So if you guys don't know, coal miners used to take a little canary down into the mine, and that canary was more sensitive to carbon monoxide poisoning and like dangerous gases than the human. So the canary begins to show signs and symptoms of distress before the human does. So you bring the canary into the coal mine with you. If it starts to freak out and like asphyxiate and show like these weird distress symptoms or die on you, you know, whoa, I'm on borrowed time. I got to get out of here. Gold is trying to send a similar message to markets right now. Guys, it has, in my opinion, with rates, yields, where they're at and kind of creeping higher lately. But, you know, gold should be selling off, but it's not. Gold is watching bond yields rise, interest rates rise, and gold's going, I'm going to rise anyway because, you know, even though your rates are going up, your debt level is just so big that I'm going to kind of diverge from, you know, what I should be doing, and I'm going to go up along with those yields. So gold is sending a weird message, you guys. Gold at $2,400 an ounce. I mean, it's really bad for the dollar empire. Let me do some quick back of the envelope math for you to kind of illustrate that. In 1970, in the United States, you could have worked a minimum wage job. We're talking like bussing tables here. You'd have made $1.25 to $1.50 an hour. Work for 35 hours, you could buy an ounce of gold because gold was $35 an ounce. Today, at $2,400 gold, priced in gold, your minimum wage right now needs to be at $71.40 an hour. So if you're not making $71 an hour right now, you're not even doing 1970s minimum wage. I mean, that's adjusting for the gold price. You know, if I could have worked 35 hours in 1970 and you would have put an ounce of gold in my hand, then today I would need to be at $71 an hour to work 35 hours, essentially full time for a week, 35, 40 hours, for you to put an ounce of gold in my hand. So you guys see how like wages in real terms are collapsing, the dollar in real terms is collapsing. So, you know, gold moving up like this, gold needs to be the stable unit of account, not some benchmark that's non-productive clumps of atoms going to the moon because our entire paper game in the U.S. economy is collapsing. So, you know, I think the West, who's been selling its gold to the East, Russia, China, Iran, who's been buying this gold, is about to smash gold. I think the West, Europe, United States, who've sold their gold, sees that the Russia, you know, the Axis, China, Iran, they're buying all this gold. The West needs to smash the gold price. I don't got another way to put it, you guys. And they can and they will, in my opinion. So if you don't think the West has the power to smash the gold price, you got another thing coming. It's not the free market setting the gold price. It's the London fix and the powers that be. So I don't think the West has a vested interest in seeing gold continue on this upward trajectory, so I'm waiting for them to do whatever they need to do to get that gold price smacked back down. And that's coming from a gold bull, you guys. You know, I'm a fan of gold. So nothing's really changed for me, though. I still like precious metals, the physical kind, for stacking for the long term. I still like mega cap, large cap energy stocks. I still like mega cap, large cap tech stocks, and I still like cryptos, you guys. Nothing's really changed here, but I did feel like I owed you guys a video. I did feel like, you know, some of these headlines would start to go stale on me, and we got to keep things moving and keep things relevant. So yeah, crazy. Yeah, that's really all I got for you guys for right now. We'll just I'm looking for that 10-year yield tomorrow to start coming down. So the 10-year yield right now at 4.53%. I want to see that come down, call it to like 4.45%, 4.44% tomorrow. I'd like to see the dollar flat or weaker. I'd like to see stocks move up. I'd like to see gold come down a little bit, and I'd like to see energy actually come down a little bit. Still bullish though, energy, guys. I still think $150 crude medium to long term is a good price target. I still think we're supposed to be, I could be wrong, throw garbage at me when I'm wrong, but I still think we're supposed to be acquiring mega cap energy stocks. I still think like a good price target for Exxon could be like 145, 150 a share by Christmas kind of thing. So, you know, all things to keep in the back of your mind. But we've had a wild weekend. We've had a wild last couple weeks, really. And we're just going to have to keep an eye on things. We'll reconvene as things progress. Thanks for hanging out with me. Thanks for supporting the channel. Like, subscribe, comment, share, whatever. You guys are awesome. I really do hope you're getting some out of these videos. And we're just going to keep going, all right? Till next time.